Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Bank stocks sink across Europe even after Switzerland's largest bank, UBS, agrees to the emergency rescue of its embattled rival Credit Suisse for a cut price of $3 billion. Swiss authorities and regulators helped facilitate the deal in a bid to stem the risk of contagion. Sharp cuts on the Wall Street despite a late recovery. The sensex loses over 350 points, the nifty down over 100. All sectoral indices in the red except FMCG and media. World's leading central banks announced their first coordinated action since the market turmoil began this month. The US Fed and the ECB, along with central banks from UK, Japan, Canada and Switzerland, moved to improve global access to dollar liquidity. Adani shares tumbled even as reports claim the group has put a 35,000 crore rupee petchem project on hold in a bid to allay concerns over debt. Adani Group spokesperson tells CNBC-TV18, and I quote, "The status of growth projects will be evaluated." It's not just about valuation. Disagreement over deal structure, limited access to data may have been some of the other reasons behind the Tata Consumer-Bisleri deal being called off. Sources say the Tatas will now build distribution assets for their beverage business organically. The Supreme Court pulls up the government after it submits the one rank, one pension payment roadmap in a sealed cover. Chief Justice says sealed covers are fundamentally against the judicial process. Order OROP areas to be cleared by March 2024. The Tamil Nadu government cuts revenue deficit by 50% in 2 years. Finance Minister Thiagarajan announces a 50% hike in property rates, announces allocations for 2 metro rail projects, industrial parks and social spending schemes. Also says the state's revenue deficit has fallen significantly. Japan's Prime Minister meets Prime Minister Modi in New Delhi. The leaders vow to expand the India-Japan strategic partnership. Prime Minister Modi says the partnership between the two nations is based on the democratic principles and respect for the international rule of law. Well, let's go straight to the top story this evening. The turmoil in global banking stocks keeping markets jittery across the world. Let me bring you up to speed with all the developments that have taken place. Switzerland's largest bank, that's UBS, has agreed to buy its embattled rival Credit Suisse in a cut price deal worth just over $3 billion. The UBS chairman called the deal an emergency rescue given the size of Credit Suisse. For context, Credit Suisse has a balance sheet of more than $1 trillion and is double the size of Lehman Brothers when Lehman collapsed in 2008. Shares of Credit Suisse and UBS are getting battered in trade. Investors nervous about the $17 billion bond write-down, and those holding AT1 bonds have been simply wiped out. The Saudi National Bank has also suffered significant losses of more than $1 billion. The Saudis were the largest shareholders in Credit Suisse, having invested $1.5 billion for a 10% stake. 80% of the investment value has now been wiped out. Amidst the turmoil, the world's leading central banks have announced their first coordinated action. The US Federal Reserve and the ECB, along with central banks from UK, Japan, Canada and Switzerland, have moved in to improve global access to dollar liquidity. Central banks had announced similar action during the 2008 financial crisis and at the start of the COVID pandemic. Steve Sedgwick and Jeff Cutmore report on the rapid developments that are roiling global markets.
The historic deal came late Sunday after a weekend of negotiations brokered by the Swiss regulators to help safeguard the country's banking system. As part of the all-share deal, the Swiss National Bank has provided 100 billion francs of liquidity assurances to UBS. In addition to the Swiss government granting a 9 billion Swiss franc guarantee for potential loan losses.
The accelerating loss of confidence and the escalation over the last few days have made it clear that Credit Suisse can no longer exist in its current form. We are happy to have found a solution, which I'm convinced will bring lasting stability and security for clients, staff, financial markets, and to Switzerland.
UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture. It is intended that the combined investment banking businesses will over time account for no more than 25% of the group's risk-weighted assets.
A series of setbacks and failures at Credit Suisse saw its shares sink more than 70% over the past year, putting the troubled lender's market cap at just $8 billion as at the close on Friday. That figure pales into comparison to UBS's roughly $57 billion market cap. Now, Switzerland's finance minister insisted the government's brokered deal is not a bailout, but a commercial solution and one necessary to stop contagion risks to the broader financial market.
The bankruptcy of Credit Suisse would have had a collateral damage, a huge collateral damage on the Swiss financial market, also risk of contagion for UBS and other banks, and also internationally.
We should not forget that we have a very fragile market environment at this point. So going into resolution would be anything else but helpful under those circumstances. So this is a private sector solution with limited state intervention.
The other interesting aspect to this over the weekend was the number of reports that UBS was only prepared to offer about $1 billion for this business at this stage. One imagines that the authorities and Credit Suisse made a hard play to increase the price tag, but that increase would have come at the cost of those additional support lines that we know about. So I think, as you've made clear in just running through the history of this organization, ultimately back to 2008, so many of the things that have led us to where we are now are really problems with the culture in the bank, problems with the management of the bank, and a successive series of bad decisions that were taken, and capital was ultimately destroyed.
Well, fast and furious developments taking place as far as UBS and Credit Suisse are concerned over the weekend. But here's the action now from the markets, ending the day in the red, and this was despite an intraday recovery where we saw the markets come off their intraday low. So the Nifty and the sensex closing over 0.5% in the red. Financials led the intraday recovery, though, after a breach of October 2022 lows by both the Nifty and the sensex. Except for FMCG and media, all sectoral indices ending in the red. BSE companies have raised a market cap of 1.88 lakh crore rupees today. Surbi standing by to wrap up the market action for us. Surbi.
Well, it was a really volatile start to what promises to be an action-packed week for the markets here in India and around the world. And what we got was a very sharp pullback move, a recovery rally of sorts. The trigger came in the form of a lot of chatter around the possibility of a final ending of conflict between Russia and Ukraine. These are, of course, all the kind of reports that were doing the rounds, but that's exactly what the market needed. Any sign of good news on which the shorts could start running for cover, and that's what happened, making the Nifty sort of try and claw its way back towards the 17,000 mark. The Bank Nifty, though it's still a little distance from the 200 DMA, nonetheless, we saw some recovery from the lows there. Having said that, the broader market continued to see a lot of pain today. If you look at the advanced decline ratio, for instance, there were 3 stocks declining for every one that is falling. So what next? We've had a lot of news flow from Europe over the weekend, the UBS and CS deal. Now the action really shifts to the US. And it's a 2-point question. What does the Federal Reserve do on Wednesday? And more importantly, in the immediate sort of time frame, what happens to some of the banks like First Republic, where the shares were falling 30% on Friday as well? It's still uncertain times, and that uncertainty is showing up in the way in which US yields, the 10-year yields, is moving back to a 3.3% level, and the dollar is moving as risk aversion continues to be the name of the game. But market participants do agree that we can always get very sharp, swift recovery rallies like the one that we saw today, because the market is very heavily short in India and in several key markets around the world as well. So expecting more volatility in the days ahead.
All right, so we appreciate you joining us. Well, the markets are down, but this is what investors seem to be flocking to. Safe haven bets like gold, prices of the yellow metal hitting an all-time high in India, Australia and UK. Fears of a global banking crisis spurring heavy flows into gold. Prices in India have touched an all-time high of close to 60,000 rupees per 10 grams. International gold prices at a 52-week high. Meanwhile, in the commodity market, oil prices falling to their lowest levels in 15 months. This is on concerns that the global banking crisis may lead to a recession. That's not all. A potential rate hike by the US Fed also weighing on sentiment. Brent and NYMEX fell by over $2 a barrel. And despite that fall in global crude prices, the central government has not yet made any revisions to the windfall tax. This revision was expected around the 15th of March. Remember, it's a fortnightly revision that we see as far as windfall tax is concerned, and hence 15th of March is when it was expected. The earlier revision came in on the 3rd of March, where the government had raised the windfall tax on crude petroleum, whereas ATF and diesel were cut to nil. Given the current slide in crude oil prices, industry is expecting a cut in windfall taxes. A notification from the government is awaited. Speaking of taxes, the chairman of the Central Board of Indirect Taxes and Customs has written to his officials seeking urgent attention on revenue mobilization. In a letter, Vivek Johri has told employees, and I quote, "As we move towards the last few weeks of the financial year, we must focus more closely on our efforts to maximize revenue collections through every possible legitimate mean," end of quote. Now, except for Adani Green, 9 of the 10 group stocks ended in the red. Adani Enterprises down over 4% after the company put its 35,000 crore rupee petrochemical project on hold. In fact, the company's spokesperson told CNBC-TV18 that the status of growth projects will be evaluated over the coming months. Vivek is standing by with the details. Vivek.
Well, absolutely right. Also, over the weekend, PTI has reported that the group has now suspended work on a project where, the total project outlay or the cost outlay was close to 34,900 crore. This was a petrochemical plant that was expected to come up in Mundra, based out of Gujarat. Now, along with that, the company also has gone ahead and suspended plans to raise close to 14,000 crore, and this was for the fundraising for this particular project itself. Now, Adani Enterprises earlier had gone ahead and incorporated a subsidiary by the name of Mundra Petrochem. Basically, the intention was to go ahead and set up a greenfield coal to PVC plant in Gujarat. So we reached out to the Adani Group. The response that we got from them was that Adani Enterprises will be evaluating status of growth projects in primary industry vertical over the coming months. So basically what's actually happening is that quite a bit of capex plans are now getting delayed or getting stalled, at least for the time being.
Vivek, many thanks for joining us. HDFC Bank may get some relief from the Reserve Bank of India on its priority sector lending. We learned from banking sources that HDFC Bank may be granted more time to reach 40% priority sector lending. Further, sources suggest that concessions for the bank on statutory liquidity ratio and cash reserve ratio look tough. Remember, ICICI Bank had received more time to complete the 40% lending norm post its merger of ICICI in 2002. Days after Tata-Bisleri deal talks being called off, we learned that it was not just valuation, but there was even a disagreement over the deal structure, as well as limited access being provided to data. These could have been some of the key reasons behind the talks failing. Manglam is here with more details. Manglam.
Well, that's correct. We were just looking at Tata Consumer and Bisleri's announcement on Friday itself, the fact that the negotiations have ended. So at the same time, I was trying to find out some of the reasons. While valuation would have seemed an obvious parameter, but we understand from some of the sources in the company and ones who were working on the deal that there was a lot of delay in these negotiations. They were going on for over 8 months, and as a result of which there was some disagreement over the deal structure as well. So those were some of the factors. A lot of the data points as well were lack of access to that were some of the factors that would have led to the deal actually falling through. Valuations, while they were on the higher side, were definitely not the main concern. And remember, Tata Consumer's beverage portfolio anyway over the last few years has been growing twice the Bisleri's growth rate. In fact, Narishco reported 44% growth CAGR between FY20 and FY23, whereas Bisleri grew about 20% between FY20 and FY15 itself. The other parts of the Tata Consumer business, which is Tata Copper Plus, which is their value-added water, was growing at a CAGR of over 100%. Their premium segment, which is actually, as a market growing 2 times the normal segment, has a market share lead of 3:1 as against Bisleri's Vedika. So Bisleri would have, Tata Consumer would have grown to Bisleri's size in a few years organically anyway. But what the deal would have given them is immediate access to the market and infrastructure. Bisleri had about 120 operational plants, a distribution network of 6,000 plus touch points, at the same time 7,500 trucks too. But now Tata's will go ahead and build their business organically for the beverage business. So that's what we've found out from our sources.
Manglam, many thanks for joining us. We will take a break, but up next, the Supreme Court pulls up the government after it submits the one rank, one pension payment roadmap in a sealed cover. We'll tell you why when we return. The Supreme Court has pulled up the government after it submitted the one rank, one pension payment roadmap in a sealed cover. The Chief Justice Diva Chandrachud said, and I quote, "Sealed covers are fundamentally against the judicial process." Ashmit joins us now with more details. Ashmit, the Chief Justice of India making it clear, sealed cover jurisprudence, the time for this has come to an end. We saw this play out in the Adani Hindenburg matter as well, and for the second time today.
Well, the Chief Justice of India, Justice D.Y. Chandrachud, making his position exceptionally clear that he is personally averse to submissions being filed by the centre, by the government, in a sealed cover. Now, this is something that he's taken exception to in the past and made his view clear today as well. And now, all of this case, today's hearing was essentially in the one rank, one pension or the OROP case that was pending before the Apex Court. The hearing, the subject matter essentially was regarding compliance of a previous Supreme Court order which had directed for these pension dues to be cleared by March 15th. That did not happen, and therefore the centre, represented by the Attorney General, sought to clarify its position, but in a sealed envelope only for the judges and not for the other parties. Now, that is something that the Chief Justice did not like, made his views clear. He pointed out that this is fundamentally against the rules of justice, that this public proceeding, there can be no secrecy in that there needs to be full transparency, and further going on to say that he's wary of allowing these sealed covers to ensure that the high courts don't start beginning this practice of accepting submissions in a sealed envelope. Now, this is the view that the Apex Court has given, has said that all the submissions that the centre has to give can be made in public, can be passed across the bar and need not be in a cover. What's interesting is that very recently, even in the Adani Hindenburg case, at the time the centre had sought to make its submissions in a sealed cover, and that too had been rejected by the Apex Court. So the CJI taking a firm view, no room for secrecy, no sealed cover, transparency is the way to go.
Ashmit, many thanks for joining us. The Supreme Court has dismissed a plea which sought mandatory registration of live-in relationships. Calling it harebrained, the court wondered if the petitioner was trying to prevent live-in relationships under the guise of fostering their security by seeking mandatory registration. A long-pending hike in real estate guideline values, an allocation towards metro rail projects and industrial parks, and renewed emphasis on social spending. These are just some of the key takeaways from the Tamil Nadu state budget table today. But in his third budget since the DMK assumed power in the state, Finance Minister P. Thiagarajan also had good news for Tamil Nadu's finances. Jude joins us now with more details. Jude, revenue deficit down sharply over the last 2 years?
Right, and that's the good news really, given that Tamil Nadu has been seeing both widening revenue and fiscal deficits in the years gone by, which is why it was, of course, cause for cheer when Finance Minister P. Thiagarajan on the floor of the Assembly today announced that Tamil Nadu's revenue deficit had shrunk by 50% from 62,000 crore rupees when the DMK assumed power in 2021 to about 30,000 crore rupees today. In fact, a lot of this shrinkage has come about on the DMK rationalizing its social spending and really cutting down on unnecessary expenditure and focusing on revenue itself. But in keeping with social spending, it wasn't quite left out of the budget today. In fact, our Chief Minister M.K. Stalin's pet breakfast scheme saw a lot of patronage in the budget. The government allocating 7,000 crore rupees to extend that program to 30,000 government schools at an outlay of at about 7,000 crore rupees. Even as the DMK also made good on a poll promise, 1,000 rupees per month to the women head of households was announced, of course, at an outlay of 7,000 crore rupees. That breakfast scheme, of course, was about 500 crore rupees. But in terms of infrastructural allocations, both the Coimbatore and the Madurai metro rails will see about 9,000 and 8,500 crore rupee allocations respectively, even as industrial parks in Bellore, in Kalakurchi, two other districts, and a textile park in Salem will see the government shell out about 400 to 880 crore rupees to set these facilities up. A long pending hike in guideline values in Tamil Nadu has also been brought about. Remember, the guideline values were cut by 33% in June 2017. The government today proposed to reinstate those previous guideline values, in effect meaning a 50% hike in existing guideline values, even as some relief for home buyers has been brought about by slashing registration charges from 4% to about 2%. So some relief for home buyers, even though guideline values have been increased overall amid an improving revenue deficit situation for Tamil Nadu's finances.
Jude, many thanks for joining us. Highlights there of the Tamil Nadu budget. Japan's Prime Minister meeting Prime Minister Modi in the capital today. The leaders are about to expand the India-Japan strategic partnership. Prime Minister Modi said the partnership between both sides is based on democratic principles and the respect for international rule of law. The top story that's being watched closely today, China's President Xi Jinping arriving in Moscow for a 3-day visit. This is the first major visit by a powerful leader since the start of the Ukraine war to Russia. He's likely to tout China's proposed peace plan to end the war in Ukraine. China had released the plan on the first anniversary of the war on the 24th of February, calling on both sides for a comprehensive ceasefire. The West and NATO have dismissed the Chinese plan, accusing it of siding with Russia. Russian President Vladimir Putin visited Mariupol over the weekend. This was his first visit since the Ukrainian city was captured by Russian forces last year. The Kremlin said that Putin's decision to visit Mariupol was a spontaneous one. Russian officials released videos of the visit where President Putin can be seen touring the city. And with that, it is time for us to wrap up this edition of Business 360. Thanks for watching. But before we go, Network 18 is excited to announce the third edition of Rising India, a thought leadership forum. The theme for this year's edition is Real Heroes, and we leave you with the story of one such hero. Thanks very much for watching.
In life, we come across many people, but a good mentor always holds a special place in our hearts. Usha Dubey, a government school teacher in Vedhan town of Singrauli district, Madhya Pradesh, is one such teacher who is truly dedicated to her students. As the COVID-19 pandemic struck with all its fury, children's education suffered the most, with schools and libraries being forced to close. So she turned her scooter into a moving library and started making house-to-house rounds where she would read to the children, give them activities and even lend books to them.
एक शिक्षक के रूप में अपने छात्रों के लिए मैं जो भी कार्य करती हूँ, वो सभी काम मुझे मन में कहीं न कहीं एक संतोष देते हैं कि मैं बच्चों के लिए कर रही हूँ, क्योंकि शिक्षक का जो पेशा होता है वो सिर्फ पैसे कमाने का एक जरिया नहीं रहता है, वो बच्चों के जीवन से जुड़ा रहता है। हम जो भी कार्य करते हैं वो बच्चों के भविष्य को बनाता है, बच्चों के जीवन को एक नई दिशा देता है।
She was determined to not let the children's educational journey suffer and did all in her power to ensure this. Her efforts did not go unnoticed, and Prime Minister Narendra Modi also mentioned and discussed her efforts in Mann Ki Baat.